Everyone, welcome to the 2025 trading review. Sorry this took so long to get out. I had a lot of technical difficulties with OBS not recording audio and messing up my last upload, and just some storage issues that are preventing me from fully recording this presentation. So got all that sorted out and we can get right into this. The benefit is actually that I've gotten to say this a couple of times, kind of revise the flow of this, so you're getting something that's a lot more coherent and hopefully a lot more helpful. So let's kick it off with some helpful guidelines to evaluating progress. And before I get into how I did, or you might have probably figured out how I did based on my post on the Real Day Trading Reddit, here's a couple of things that I've synthesized in terms of evaluating progress. One of my hopes is that sharing my story and my progress will help other traders. It'll help fill in the gaps between how do you go from an intermediate trader to doing this full time. And this is kind of a rubric to see what are you doing generally, right? People are going to come in with different strengths and weaknesses and different things that they have to work on, different life circumstances. So here's kind of a guide, a general template as to how to assess your progress and how to figure out what's the best course of action for you to take, right? What gives you the biggest bang for the buck month over month. So first part is you can look at your end result, right? Your P&L. At the end of the day, that's your score. Did you make money? Did you lose money? How'd you make money? That sometimes people put too much emphasis on that metric, but that's what we're striving for at the end of the day, right? Being consistently profitable. So we want that to be green, and we want that to be as even as we can possibly get it to be. Now, the second thing is just evaluating and assessing your current level. So what are your strengths? What are your weaknesses? What are some solutions to your weaknesses? What are some things you improved on this year? What were some important things you might have learned? What was your mindset like? So just giving a more bottoms-up approach to where you are as a trader and what you can possibly work on. The third part is then analyzing your trades. What were your best trades? Or is there any low-hanging fruit, which is usually for me trades that I can cut out? Are there certain types of trades that I prefer? So I know some traders, they really like credit spreads. Other traders like hit-and-run day trades. Some traders only stick with swing trading, directional stocks. So people have different preferences, and it's up to you to figure out what those preferences is, and that kind of carves into your identity. What were your best setups? What were your worst setups? What criteria did they have? So just taking a look at your trades in bulk and seeing how they performed. You can look at how they did in different market conditions. You can look at how they did when they were favorable. Did you take trades against the trend? How do the market conditions affect you, right? How'd you do in harder market conditions? If there's a lot more chop, maybe more volatility could be helpful to some traders. Maybe it's really tough for you to trade. So how'd you do in those different conditions? And do you have any sort of favorite or go-to setup that you like? And then fourth, based on all of that, you've assessed your level, you've analyzed your trades, and you can give a game plan. And your goal is to clearly identify the problem and the best proposed solution. Now, you might feel like, well, maybe there's a lot of things I have to work on, and that's okay. As you get better and better, it's the gains are diminishing, and you really have to try to find the fewer things to improve on. So the way I kind of lay it out is like, okay, well, what are maybe the one or two biggest things that I can focus on for a 3-month stretch? Nail those down, get them solid, and then build it up into the next 3-month stretch. And in that game plan, you want to create your process goals first, right? And this is basically what are you going to do or change on a day-to-day basis that's going to float up into your P&L, right? If you can have a P&L goal, which can maybe be like make $10,000 or something like that a month, right? Maybe that's your P&L goal. And that's fine, but that, there's a lot of moving parts to that, right? What's the market doing? How are your setups doing? Are you someone, if you take a lot of day trades, maybe you're able to even out those day trades in that period. If you take a couple of swing trades, there's some conditions where you're swing trading more, some conditions where you're swing trading a lot less. So, those are variables. So I think setting the process goals first and focusing on those is going to be important, because once you nail those down, you're able to get into some P&L goals. So 2025 results. I split this graph into 4 segments. So they're split into the quarters, and you can see the orange line, which is SPY. That's how SPY did in each quarter. And the green line is my year-to-date cumulative P&L. So in the first quarter of the year, pretty break even. I was up a little bit, I was down a little bit, but finished the quarter break even, and SPY was mostly pretty choppy. So choppy market, break even profits. Q2, we had the big drop, nice recovery. I cut out some unprofitable strategies from Q1, so I had a really nice run in Q2, and finished off this quarter pretty strong. In Q3, I had a trending market, and I had a pretty nice run until about the beginning of September, and then I had given my gains back with a big loss on an AMD trade. So that had gone against me, and I finished the quarter slightly positive, a little bit break even, but I'd kind of given back the gains that I had made in the run before. Q4 market was getting choppy. The trend was beginning to weaken. We got that big red candle early in October, and then that just sort of sent the price action super choppy. Choppy market, and I was kind of break even until the very end. I had a couple of swing longs. They didn't do, I had a guess in the market. It didn't go as it intended, so took some heat on those trades, and it was a little bit overstated too because I had sized up. So I think the negative impact wouldn't have been that big had I have a consistent size throughout the year, but is what it is. Finished the year on a loss. This is, I think, understates it a little bit because it ends on the 26th because I'm doing it 13 weeks at a time. So I do miss, I think, a couple of the last days of the year where I took 1 or 2 losses. So it's closer to about a 15% loss over the year versus 15 to 20% loss, I would say. So that was how I finished in 2025. I think overall I had a pretty decent, nice 5-month stretch run, and then, kind of flat down at the end of the year, kind of flat down at the beginning of the year. So I think there was some promise in here. And the main thing is really just not giving my gains back, right? Like I had some nice stretch. Like, look, I maybe took a loss or 2 here. That's fine. I managed to rally back up. Took a big loss over here, and then I never really quite recovered from that. There was a couple of losses that piled up quickly, and that just ate away at all my gains there. And I flipped pretty hard because I was up about 10%. You can see at the end of this graph, I finished down about 10%. So there was a pretty big 10% swing. So let's look at the improvements. What did I improve on this year? Now, I bucketed all these improvements into my A game, my B game, and my C game. I was borrowing this from Jared Tendler's book, The Mental Game of Trading. I found this helpful for me this year as I was trying to figure out where did my improvements come into play, right? Because I felt like, I'd had looked at a lot of different stuff. I had made some technical improvements, some mindset improvements. And really, at the end of the year, I probably never had felt better mentally and technically in terms of just dealing with size, being able to take losses. I felt pretty good about all those things. So bucketing these changes or these improvements into these 3 categories is very helpful for me. So on the A game side, that is your ceiling raising. These are more technical and learning new things over here, as well as some sizing. So on the technical side, I was using the 8 and the 15 EMAs in conjunction a lot more for both the swing trades and my day trades. I was incorporating some VOLD or market internals in my analysis, and I improved my understandings of earnings time spreads and their executions. I did a lot of learning new setups. So I had tried trading overnight stocks that are overextended but have strong momentum on these pullbacks. There was a certain setup that I'd spotted and figured could work, and then ended up biting me in the ass later in the year. That was resulted in that AMD loss. Trying out Straddles and Strangles. I was learning Dave's SPY super system trades, out of the money puts. I was looking at Gex decks, OI levels for potential SR, and was remaking, creating a lot of my own scans and indicators in TradingView. So I was remaking some of the stuff in one option. I was messing around with my new indicators, trying to remake scans. So all of that was helpful and informative and fun. I enjoyed doing all of those things. On the mindset side, using the 8 and the 15 EMA gave me a lot more clarity. Looks like I had written this wrong. Gave me a lot more clarity on taking losses. And I was pretty comfortable trading up to swings, up to about 1,500 on swings, 100 on 100 shares kind of size on day trades. So pretty comfortable with those sizes. On the B game, I think my average level, my swing trading selection and my entries were generally pretty good. Obviously you're going to have some maybe subpar entries here and there. Or maybe you miss a technical level or something like that. But I was pretty good with that, with those trade selections and my entries, and I looked at all my swing trades to validate this statement. There was general improvement to my chart making, so like high volume candles, trend lines, AVWAPs, or chart marking, I should say. Sorry. So just marking up some of these levels and the structure of these charts to see what's going on here. On my C game, I was always taking technical losses, even on losers that I held too long. There was a couple times where here's a loser and I was like, okay, broke this technical thing, but it's because of this. So maybe I'm going to move my technical stop over here. Now, you could argue that, hey, once you set the stop, you should have moved the stop. Your stop is your stop. And I think that's totally valid. But the important thing for me was that I was making my loss based on a different technical level and not a P&L level. So to me, that's still a floor raising improvement because I am still evaluating the technicals and not the P&L. The other thing is just not being easily shaken by these big red candle days. I've definitely seen, 5 or 6 of these at this point. So once you see 2, 3, maybe 4, like you should be getting used to it. So not really too crazy for me here. So the takeaways here is that a lot of my improvements were in my A game. You can see most of the bullets were in here. So there was a lot of basically ceiling raising components. And the C game improvement was a lot lower. I had a little bit of things, but not as much as the A game. So to me, what that meant is that the range of performance I had was pretty wide, right? At my A game, I was getting a lot better. I was getting really, really good. But my C game didn't really come up as much. So when I'm off, right, and really, like, you're not going to be at your peak all the time, right? What's more important is bringing up your floor and your average. And you're going to be performing at those levels a lot more often. So, bringing the C game up is going to be really important for improving my trading in 2026. And I believe that wide performance is probably responsible for these boom and bust cycles, right? I hit a nice patch. I hit a nice run. I was hitting my A game, maybe my B game. The mistakes weren't really piling up, and then maybe the market conditions change a little bit. I get maybe a little bit too overconfident. After a really nice run, I start extrapolating a little bit. I start expecting a little bit more. That's when I give back the gains. That's when I have the bust. So those kind of spiky P&Ls, boom, bust cycles over here, they just look like one of those really messy D1 charts. I believe a lot of that is because my floor is probably too low versus what my ceiling is. So some strengths and weaknesses. Strengths, I think I have a lot of patience. I feel like I never overtrade. There's not many times where I have FOMO. It does come up, I would say, especially when I think FOMO and fear, I guess in the name, fear of missing out. So those kind of go hand in hand, but I have most of those things kind of locked up. The other thing is the market experience. About 4 years of market experience now. I've seen bear markets. I've seen flat markets. I've seen bullish markets. I've seen big drops. I've seen these terrorist news now. I've seen transitions, these horizontal LPTE D1 markets over here. I've seen big drops, big chops, lots of volatile Christmas tree candles. So I've seen a lot of things, and that goes a long way. I think there's not too many things that have sort of shaking me out here. I do a good job at focusing on the technicals versus over-indexing on the fundamentals. I think there's some traders who have a difficult time putting their fundamental bias outside of the technical bias, and I've just never really had that problem. I don't spend too much time analyzing fundamentals. I keep an eye on things generally. Look at the unemployment, the GDP, keep an eye on the inflation. Just keep an eye on what are the themes. There's always a theme, right, throughout the market. In 2022, inflation was a big theme. There was a mild theme with the banking crisis in the spring of 2023. AI in 2023, 2024. That was a strong theme. You had the yen carry trade on that big drop in August. The election became a theme in 2024, and then the Trump administration, then tariffs. So, the theme is always sort of changing throughout. So the main thing I think fundamentally is just having an awareness of what the theme is going to be that's going to keep you ahead of some of these news items. You can't obviously block every kind of news items, but it is important, right? When inflation was very important, the CPI number became an important economic release. Right now, that number has been very devalued compared to what it was in 2022. Next thing here, great stock selection, price action skills, technical skills. Feel really strong about that. I've experienced trading a lot of different setups, pretty much all the setups in the wiki, the one option, Dave's Room. I've traded all the trades, and you might have seen earlier that I put my size of trading up to about 1,500. I'd say I've taken some trades even about 2,000 that I felt fine at, especially more recently in January. So I think my sizing has felt pretty good in terms of what I feel comfortable risking. Here's some of my weaknesses. The desire that I have to explore new strategies leaves me as a jack of all trades, but a master of none. And, I've done a lot of things, but it's not like I've mastered all those strategies. I've just sort of traded them. So that I think has left me in this position, which has given me a wide range, right? When the going gets tough, when the conditions get choppy, I need something that I can anchor on. I think a lot about this with tennis players, since I coach tennis and I play tennis. The really good tennis players, they have a very strong sense of their identity on the court, right? They know, they have a lot of tools in their belt, but when there's a big point that comes, a really big pressure point, they have the chance to break the opponent's serve, get ahead in the set. It's a really important match. Maybe it's a final. They have a pattern that they can lean on, right? They know their strengths. They know the shot that they want, and they're really trying to engineer the point to get that shot. So I'm in a situation where I don't think I have that clear identity yet. I'm still trying to carve that out, but I need something that I can anchor on, right? I need just that reliable setup, that reliable weapon that keeps me out of trouble and gets me good trades. Second thing, when my confidence is low, I'm more easily influenced by other traders because I'm subconsciously looking for that next silver bullet. So this sort of explains the kind of jumping around, trying new things. I think part of that is curiosity. Just, let me try this out. Let's see how this works. Just curious about the mechanics of it, the strategies. But, sometimes, especially when the confidence is low, you have doubt in your own strategy and you lose faith in your setup. And that's when you think, okay, well, this is not really working, but hey, this guy's been really doing really good today. Maybe I should just do what he's doing, right? So that is a big weakness of mine that I think has definitely gotten better as I've gotten better at trading, but it's more, I think, probably a personality flaw from the lack of confidence. Number 3, because I don't commit to a few setups, I lack a clear understanding of a good entry and a good exit. So this is extremely huge because in your setup, you want to know like the back of your hand. You want to know when you're going to enter, right? Like, what's your setup? What do you want the market to look like? Here's your criteria for entering the trade. When you see the criteria, you enter it, and your technical stop is, usually what you're going to target, right? And some people have a loose target based on price action. Other people may have a hard target to some technical level. If you're a day trade, maybe you're taking a trade, taking profits at the high of the day. Maybe you're taking profits at a D1 level. So you have to see what happens. But, you need the clarity in your setup. Next one here, I put pressure on myself to trade extra in a D1 LPTE because I believe I need to figure out how I need to make money if I have to do this full time, right? There's going to be periods where the market's really nice. It's a lot easier to get money. And there's going to be periods where the market's pretty choppy and you have to lay low. For me, I'm thinking, okay, well, if the market's choppy, the best thing to do is to generally not trade, right? Reduce the trade count, avoid trouble, right? Not burn through your capital. And then you want to strike when we do get some nice conditions. I think I put some extra pressure on trying to trade those more because I want to have a bigger stream, right? I want to have a higher floor, a higher base in those conditions. It doesn't have to be as high as a trending market, but I want a way to figure out money. And I think that idea is good and it's important, but I'm sort of putting the cart before the horse here, right? I need to focus on just getting pretty much trading for an income, even if that means trading very, very little in LPTE and getting that down before I move to trading for a living, right? Where I can sort of fill in some of those holes. Because right now, in those LPTE things, any sort of over trading is just not worth it. You get, you just get chewed up here. And finally, last weakness is that I hit these nice runs throughout the year, but I hit snags where I give those gains back, creating that boom and bust P&L. And I think all these previous weaknesses have sort of explained a bunch of that. Some of the mindset thing will also explain more of that, but that's the overall weakness, the main problem, right? I'm having some nice runs, but I'm giving them back. Here I want to talk about what I learned from Dave's trading room. I'm not going to go over all the bullets. I'm just going to go over the bullets in blue, so just feel free to pause this if you want to read more of it. I've organized it into mentality, technicals, options, and just doing this full time. Dave manages a room in right line trading, so I took a 2-week free trial. I liked what I had. I tried it out for a quarter, so I was in it for maybe 8-10 weeks. I think it was a great trading room. Obviously, if you've seen Dave, you know that he's an amazing trader, and just hearing him talk about the market, manage positions, evaluate positions. I was trying to give him a lot of picks that I felt were good picks, help him out, learning what he was doing. So definitely learned a lot in his room, and he gave me that extra, I think 10% technically, to really polish out a lot of my game. Let's start with the mentality first. So when he's in a position, right, and then get a big news event against it, he's not panicking, he's not freaking out. He's just looking at the news. He's seeing, all right, is this an overreaction? He's not like, oh man, I shouldn't have taken this trade, blah, 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 blah. You take a trade, news is going to come sometimes, and sometimes it's going to destroy your trade. And that's just part of it. You have to accept that. That's part of the risk that you accept. You really, there's scheduled news events that you can avoid, but there's sudden news, you can't really avoid that. So he doesn't really get rattled by those. Sometimes he takes profits and then the move continues. He doesn't really berate himself. He's pretty happy with the profits that he's taking. He doesn't really linger on the trade. And the way he trades is like, he gets a good entry and he usually sets a profit target. He takes trades at the profit target. Now, sometimes the trade moves past that profit target, right? And sometimes he gets a nice exit and he luckily picks a top. But many more times, the trade goes past his entry and he could have gotten, maybe another 5, 10, 15, 20, even sometimes a doubler, right? Double the profits that he took on some of these trades. But he doesn't really dwell on that. He doesn't dwell like, oh man, I could have taken a lot more. He has a strategy. Here's his entry. Here's his exit. He takes profits and then he moves on. On the technicals over here, he has very few positions when the market is choppy. So he may take a loss or two, but he doesn't take a huge jumble of losses. On the stocks, he doesn't enter stocks that are too overextended. So anything, you can call it maybe like 2 ATRs is a good rule of thumb, maybe 1.5 ATRs for some stocks. So that sort of range, generally, he doesn't really take stocks that are too extended from there. And he heavily leans on the 8 and 15 EMAs as support and resistance on the trade. So that are his primary D1 levels, and he's looking at these bounces, very strong stocks that bounce off those levels for entries. On the options side, the main thing I learned from him is just how he deals with these wide bid-ask spreads, and he really just avoids spreads that are too wide, right? Spreads that are $1 difference, he doesn't take them. Or sorry, $2 difference. I think about $1 is the widest he'll go. So that's just a nice, good rule of thumb. And becoming profitable. He talked about just being profitable for 2 years, just generating income month after month after month, and building the confidence that way. So a lot of things I learned from his room, and ultimately, I could have stayed in there, and I think it would have almost been an easy way out. You could have just he's giving trade recommendations. You take the trades. You don't really, develop. I think you can develop a little bit, but you don't develop as much as doing this on your own. And there's gonna be. Oh, I need to be the trader that can rely on myself and not rely on other traders. So, that's why I ended up not continuing in the room, but definitely, if you're curious, it's a fantastic resource for these traders. I think Rightline Trading has other traders. I don't know anything about those guys. I don't know anything about their strategies or the bots, but I can only vouch for what Dave does in his room. And if you're learning, would recommend the free trial. Just a great learning opportunity. Mindset analysis for 2025. Overall, fear and confidence swings are my biggest mindset problems. Now, fear has always been, I think, a problem for me. I'm sure it's been a problem for traders in a wide variety of ways, but it's changed since I'd started. A lot of my fear was just doubt in my own ability when I first started trading. Now I'm pretty confident in my own ability, my ability to trade size, my ability to read the market, find good stocks, get good picks. The main sort of culprits here of fear is hesitating on my entries, lacking clarity in my market edge, and then lack of clarity in my system and my edge, I guess my stock edge to be more specific, right? And I talk about hesitating on entries again just because that kind of relates to the edge, right? And really it's like you want to be patient waiting for a good entry, and then when it comes, you strike really hard, right? You're decisive when you strike, and you're decisive when you don't take it. So that decisiveness is something that I've had for some stretches, and then I didn't have for some stretches. So that is an aspect of fear, right? Because I'm unsure. I don't want to take the trade. I don't want to lose on the trade. And to me, I think this just goes down to knowing my system, right? If I'm doing a lot of different systems and I don't know them super well, I'm not sticking to one, there's too much variance. Now, in an A-game situation where I'm trading at my peak, I'm doing really well, no problem. If I'm a B or C game situation, that's when the gains start to slip. It's hard for me to maintain that level and focus and that confidence, really. That's, relating to the next point here. Not knowing to exit is also part of that edge, right? For me, profit targets work pretty well on a technical basis. If I'm trading a bounce off a VWAP, I'll take it to the high of the day, natural profit target. That's the fear. It's just the hesitation. It's a subtle form of fear, but it is a form of fear. The lack of decisiveness. Confidence. A lack of confidence sort of just being if I'm maybe not interested in looking for trades because I don't want to take trades. I'm afraid of taking trades and losing. Comparing myself to others more. And getting more discouraged about myself for my lack of progress. So this happens when I'm generally lower on confidence. I'm more likely to flop, more likely to switch, less likely to stay the course. The overconfidence comes on the other side where I've hit a really nice run. I think I've kind of maybe nailed it. Maybe I'll try some new setups now that I'm mastering these setups. That has always never worked for me. And I've gotten wiser every time. All right, I'm aware of the overconfidence. You can feel it bubbling up. So way better than when it was earlier, but that is still something that has popped up. Last part is wishing, which is an interesting one, but there's a part that you sort of wish that every trade felt very easy, right? You could just close your eyes, you can make money month after month. And the other thing is just wishing that I could trade all these different setups, right? I want to take these day trade like Pete's, or these different day trades like Dave takes, or these different swing trades that other people take. Some people take more hit and run trades. Maybe this person's really good at debit spreads, right? So just wishing that I could do it all. And there's an ambition there, I think, that is commendable, but there's also kind of biting off more than you can chew. And again, it goes back to this whole jack of all trades, master of none situation where it's just spread too thin, right? Spread too thin, boiling the ocean, and you don't have that setup or two or three that you can really rely on before you start to climb up more of the mountain. Tilt and greed are much smaller mindset mistakes. I've just listed them out there for the, posterity, I guess. But on the tilt side, there is a little bit of element of expecting perfection. When I get a new setup and I hit a nice streak, I'm like, okay, well, I'm going to be, I should rarely win. I should rarely lose. It's not like a true perfection, but I think I have sort of a ideal standard of how I should be doing on a overall basis, right? That 80-85% win rate that I'm really hitting when I'm at my stride. The other part of tilt is jealousy of other people who are able to trade full time, or maybe just have been able to achieve this goal that I haven't achieved yet. And it's a mix of emotions. I think probably before the jealousy is just respect, right? Anyone who's doing this for a living, you know how hard it is to do. You've seen people struggle. You've conquered all of that, and you have confidence in yourself to do this. So that is first and foremost for me, right? Anyone who does this full time, I'm looking to learn from them, and I'm looking up to them. But the jealousy part is maybe a bit of a competitive jealousy where I'm thinking, man, I wish I was at that level, right? And I'm not at that level now, but I want to be at that level. So it's I don't think it has affected my trading, but it's just something I'm noting here. It's something I've noticed crop up throughout the year. Nothing terrible, but just keeping an eye on it. I don't think I'm a very jealous person, so it's pretty rare for me to kind of feel that, but this is one of the rare cases I do. I think just because I want to achieve this goal so badly. So, jealousy comes out when you can really care about something. Greed, moving up my profit target after a quick move and going against my immediate analysis. Now, sometimes you make a guess. You're like, hey, look, the market's really bullish at this profit target, but it's better just to ride this move. That's fine. There's other parts where I'm moving it out of pure greed. There's no technical analysis involved. This happened maybe a handful of times. Again, pretty minor, but that has happened a couple times, and it goes back again just to clarity, right? Clarity in my edge, knowing the move and the profit that I want, and being okay with that. So, putting this all together, concluding this all, to me, my emotional hurdles stem from uncertainty about my own ability because I haven't proved myself to the level that I want to prove myself. And I need to create a lot more clarity as a trader, more clarity in my identity as a trader. And the thing that will give me the biggest gains is just nailing down something that I can rely on, something that works, something that keeps me out of trouble, and something that anchors me. So let's get into the analysis now. I analyzed all my swing trades. It took 180 swings. 135 were directional swings. 45 were a mix of other strategies like credit spreads, weekly at the moneys, time spreads, straddles, etc. And I looked at a lot in terms of both win rate and profit factors. So I looked at the market conditions. I looked at the quality of the stock pick. I looked at the entries. I just compared SPY trades versus stock trades. On the stock picks, I'm looking at the types of setups, maybe how organized the price action was, things like that. So that's what I was looking at. And I found a couple of things. So the first thing that I found is that my market bias is usually aligned with the move that the market makes, right? So what I tracked was, okay, here's my market bias at the time. Here are the market conditions at the time. And then here was the move that happened over this course of the trade, right? Either it moved up, either it moved down, or either it moved sideways. So usually if I was bearish in the market, I would more often be right than wrong. And if I was bullish in the market, vice versa. So that works pretty well. When the market is mildly bullish, that's when it gets a little bit trickier to predict. You can think about this as like you have a bullish market, but it's kind of grinding up. It's kind of a couple candles after a dip, right? It's making a new high. Yeah, it's bullish, but it's not the absolute best entry spot. You want to get a better entry spot. So there's just some situations where being mildly bullish, it's actually more of a position of uncertainty. I generally don't chase stocks in choppy conditions, and I did a little bit more quote unquote chasing. They weren't chasing, but maybe they're a little bit more overextended than I would have liked. But you can get away with that in bullish conditions because the trend is so strong. You're really picking. There's a lot more stellar D1 charts to pick from. I really did a great job about doing that. My general stock picks were pretty good, but I found that the top pattern had the best win rate and profit factor. And I really only took these in bullish and chopping conditions. The top pattern is more rare in bearish charts. It's still there, but it's more present when bearish top patterns are more present when the market's at least neutral. And when it's bearish, you can. I was taking kind of more pullback setups or compression breaks and so on. So that's what I noticed with the top pattern. My biggest mistakes, which I'll get to more in the next slide, the two that I listed here is just trading divergent tickers, which is a technical mistake, and then just taking some trades against the market where I was going long when the market was below the 8 and the 15 EMAs. That's a nice line in the sand that I took from Dave, where, again, if it's below the 8 and 50 EMAs, you're going to be looking to be more bearish. If it's above that, you have some bullish confirmation here technically. So these are some technical mistakes that I made that I can fix for 2026. So I mentioned in the second slide here about this process, look at what you can cut, look at what is some low-hanging fruit. So here's 5 things that were some low-hanging fruit. 1 were SPY swing trades that cost me about $1,600. Divergent defensive tickers, those cost me about $1,200. And also some of this, again, a little bit skewed up with some sizing towards the end of the year. So that's the caveat here. But with that aside, number 3, not using the 8 and the 15 EMA as my support and resistance. So there are trades where using that as support and resistance, I would have cut a loss much quicker, right? I didn't hold a loss too long. So that's how much money it cost me from holding those losers too long. And the number right next to them is how many, the trade count of those things. So there's only 2 times that happened that I identified here. Taking trades when the market against the market. 6 trades here, a little bit smaller than that because that happened a lot early in the year, namely in February, I would say. And then a couple of trades where I was copying other traders where, it was a setup that I liked and I took, but really there was just a couple of check boxes. Maybe I wasn't totally comfortable with it. Maybe I wouldn't have normally taken it, but that cost me some money. So overall, 22 trades cost me just shy of $5,000, and cutting out the bottom 15% of my trades results in a big jump in my return on equity. I'm basing this off the $30,000 dollar size that I had last year. So about a 16% return on equity. And it's all about improving the C game is just cutting out the anchors, dragging down your P&L, right? So a lot of times just not taking terrible trades is half the battle, right? And the second half is just making sure you're taking good quality trades. So some of the solutions here. First is this initial analysis and clarity. So I wrote out my setups in my edge and paragraph style, right? Why am I looking for this setup, right? What is this edge generally? Why do I want this entry, right? What's so good about this entry that I'm taking it? Why am I respecting this market condition, right? And so on. So that's important, just to lay out in paper, make it concrete. Here's my edge and here's why it's my edge and the rationale about why it should work. Second is what setups work best for me. On swings, I mentioned the top pattern and just getting a sweet spot entry when the stock is not overextended. Day trading, I've tried a lot of different day trading setups. I didn't do a whole deep dive, but what I'm sticking to here is just the tried and true VWAP bounce. Bounce off of VWAP with relative strength. Bread and butter. That's a great pattern you can rely on. So the technical focus here for me is focus on finding my own setups, doing some more my own scanning versus reading comments in the chat room. I think that has sometimes had an influence on me. Sometimes not really. I've not really been able to totally form my own opinion or maybe get too influenced by my own opinion. So, just kind of really going a little bit zero dark 30, just focusing on executing my own trades, for my own market analysis and getting confidence through there. The second part is just focus on always taking my setups when I see it. Right now that I've laid out my setups, that is the next thing, focusing on executing. So to me, those are the solutions, and I'll do an overview in the next slide here about tying this all together. But why does this help, right? So clarifying my setups, I think, removes a lot of the emotional data that is unhelpful to trading. Now, I think some traders say, hey, look, you need to be a robot, and I don't totally agree with that. I think there is a narrow band of emotion, and emotions, it's data and signals, and you are, you're processing that. And to me, I think a professional trader's emotion, an experienced trader's emotion, is very attuned to the market situation at the time, right? So in this example here, we're in a D1 LPTE. It's very, very choppy. If your initial emotional response is that of caution and hesitancy, that matches up with the market conditions, right? If you're go gangbusters, super, super greedy, that is going to end up backfiring you in a choppy conditions, right? Because you're going to have great trades and they're going to go against you. So, that will, that will hurt you. So what you want to do is just align them more together and ideally, right, have the emotions, remove the bands and the spectrum of emotions that end up clouding judgment versus being a important input to your analysis. And clarifying my setups does that to me, right? I mentioned earlier that my biggest mindset problems were fear, right? Hesitancy on getting into trades, not sure exactly where I want to take exits. I'd mentioned about moving my exit targets up. What else? I think, just some little bit of tilt there, but clarifying all those things, right? Saying, here's where I'm going to enter and sticking to that. Here's, based on this, here's typically how I like to size my exits, right? Sticking to that. Knowing the size of my trading before that. And defining over trading and under trading, right? I mean, really at the end of the day, if you always take your setup, you're not over trading. So over trading is taking trades outside of my setup. Under trading is looking at trades that completely fit my setup and then not taking it, right? That is under trading because you had your setup right there and you didn't take it for some reason or another. And 99% of the time, it's an emotional reason out of fear and out of uncertainty. And the last couple things is that you have defined a good entry, so you don't hesitate on your entry, so that goes back earlier. And you don't also overanalyze your loss, especially on a single trade. You want to look at them in a batch of trades. But you kind of define a good winner, good loser, good entry point, and so on. So summarizing all this together, in 2025, I hit some good patches, but overall ended up in the red because of the high variance between my ceiling as a trader and my floor as a trader. And that contributed to the mindset problems as well. I think those were intertwined. In 2026, my goal should be improving my floor, and I believe that should reduce the up and down nature of my results. So to improve my floor, I need to focus on two things. One, having a clear market game plan. Two, having a clear idea of my swing trading setup and my day trading setup. So here's what I've already done, right? I've done my mindset analysis. I've analyzed my swings. I've written out my edge in paragraph form. Some assumptions I need to rewire is first, focusing on the process before the business. I'm still tracking this. I'm still treating it like a business. I'm open for business. This is year 2 of the business. Last year was year 1 and we were in the red. This time we're year 2. We're going to see how we do. But focusing way more on the process. I'm just going to be tracking this business loosely, right? But it needs to be, in my mind, 90% process, 10% business tracking. And even in terms of my thinking, the percentage of all thoughts I have needs to be process focused, and then just enough sliver to be tracking this business. Second, just feeling like I need to master everything at once. I'm going the opposite direction. Instead of master all trades, I want to be the master of this swing trading setup and this day trading setup, right? I want to be the supreme ruler of these setups. I'm just nailing them day after day after day, like the back of my hand, until it just feels right, totally effortless. Rewarding myself for executing my setups to a T, not a tie. Not very formal here. Executing is the biggest process day-to-day focus that I can make. It divorces me from the P&L outcome. I'm rewarding myself for taking the setup that I define as good, and that's fully in my control. Right, as soon as I enter, I'm out of the control I have on the trade is out. But before that, I have control of the trade. Right, I have control of what I want to do. And like I mentioned before, just focusing on batches of trades rather than a single trade, which removes the weight of any one trade. Right, any one trade, win or loss, is not a big deal, but a batch of trades, batch of 25 trades, 30 trades, 35 trades, 50 trades, 100 trades, right? That is what's much more important. To summarize this, we have clarity, which is knowing my edge. We have focus, which is sticking to my edge in my analysis and tuning out noise. Execution, which is nailing my setups when I see them after I've clarified them. And I think this will lead to a lot more stable confidence, which is trusting the execution of my setups over a long period of time. So those are the things, maybe the 4 words: clarity, focus, execution, trust, right? In that order, they all flow together here. So 2026 plan. Sizing, I'm going to have a 50K account, sizing up a little bit here. Feel totally fine. I don't think again, very confident I'm not going to blow up my account. Very confident trading the size. Swing trading amount about $2,000 of max loss. I'm swing trading options. On day trading, I'm day trading mainly stock. I'm looking for, $100 moves. So 100 shares, some stocks, 50 shares in some stocks, 200 shares in some stocks, depending on the volatility and so on. But that's how I'm trading it. Daily process, I have a market outline, keeping it pretty simple, mostly technical focused here. What's my day trading plan for the day? Swing trading plan for the day. Swing trading, I'm trading my top pattern. Day trading, I'm trading my VWAP bounces. Again, I'm tracking, rewarding myself for executing my system, focusing on more time on scanning and charting rather than reading, getting influenced by chats. I have a skill goal, which is improve my C game, right? That is my number one skill goal. The daily process influences the skill goal. The skill goal influences the business goal, which I would like to be green every month, right? And, if I'm not, I'm not. But that's ultimately my business goal: be green every month and be able to take money on my account every month. So if I hit my metrics 6 months in a row, right? So I'm green 6 months in a row. I've executed well 6 months in a row. I'll give myself a raise, maybe 20%, and move on from there. Just some more information on process and business tracking. Just some expectations on maybe how many trades I could potentially take per month. The main thing I want to call out here is that on the process tracking, I'm tracking the streak of executing trades, and I'm also tracking scenarios where there's kind of 4 scenarios, right? There's 1, I take a trade and it meets my setup, right? That's the ideal one. Number 2 is I take a trade that's not my setup, which is what I don't want to avoid. 3, and those 2 things, it's easy to track because your trades come in your journal. The other 2 trades are harder to track. These are trades that you don't take. So there's a trade that you don't take, but it meets your setup. And I'm also tracking those because that is a sign that I'm under trading. And the last one is that I'm taking a trade. I don't take a trade that it almost comes to my setup, or that's not my setup. Now, I found that in these first couple of days in January, right, there's a lot of trades. It's not like I'm just like throwing my system out the window, but there's some trades where it's like, all right, here's my check boxes, but it's missing 1 checkbox, maybe 2 checkboxes. So, I end up not taking it, right? And, I don't know if that's going to be a good thing or bad thing until I analyze a lot of trades in batch, like I mentioned, but tracking those things as well, because that will lead to some more technical improvements that, again, should boost up the C game in the long run. Business tracking here, weekly, monthly, quarterly P&Ls. I'll log the days where I take no trades because I think that'll take some A-game improvement here. Maybe there's some days where I'm just not hitting my setups and I don't take them. So that is what it is. Here's my expectations for trades. This is just loose. You know, if I'm taking 1 or 2 trades a day, maybe a couple swing trades a month, and a couple things I won't do is I'm not going to expect the same profits every week or every month, right? I'm letting go of this fixed nature. I know we all want stable, flat P&Ls, but I think the reality is that there's always going to be variance, and a good chunk of that may not be in your control. So just focus on, you know, if your baseline is green, then that's pretty nice. Not going to extrapolate any current results. Not going to expect my A game to always continue, right? And assume that that's the normal. That's the mistake I've done in the past when you get overconfident. You think your best is actually your average because you're so used to that. But it's not, right? It's you just hitting a nice patch. Some warning signs here is that if I go on a big run, and I've noticed that, 4 weeks of big gains, that's usually when I give back some gains the next week. That's when I'm like, whatever it is, I'm just going to take the money out of my account, even if it's not end of month. And just reset, just mentally reset, and I need to get ahead of that sign. I think that's something that Pete does, and I really like that, so I'm going to try to implement it this year as well. Now, some future videos, I'm not going to do the weekly trading reviews as much, or even the daily ones. I've done daily reviews for a year, I've done weekly reviews for a year. That's been really great for me. I think this also helped a lot of people out, so if it's helped you out, that's fantastic. Right now, I feel like there's not too much for me to share. I just want to focus more of this review on the business and process improvement side. So that is going to be really the main updates here. So I'll do a quarterly update videos, just business reviews, where it's like, hey, here's how I did in Q1. Here's how well I executed my strategy. And then Q4, won't really be a Q4 video like this. I'll just do a whole full year review. So that's pretty much the plan. But yeah, those are the future videos, so that the output is going to come down. But hopefully the learning when it comes out will still be helpful. And it also gives you some sense that, I'm looking at this in a little bit more longer batches, right? At least a quarter's worth of data before making any sort of meaningful or drastic changes. So thanks so much for watching, everyone. Hope this was a helpful video and was definitely long overdue. And I will see you all, I guess, in April for the next video. And if you have any questions, you have any comments, always send a message on YouTube. You can message me on Reddit. I'll leave here's my Reddit tag over here. If you want to send me a message, you have any questions about stuff, you can reach me on the One Option chat. You can hit me up on Discord as well. So yeah, just if there's any questions on stuff, feel free to hit me up. And always happy to chat and learn from you or help you out if I can. So thanks for watching, everyone, and I'll see you all in the next video.